Investors failing to find tenants. Let's have a look. Hello everyone, Florian.heise here and welcome to another episode of HeiseSays. I've got my stein of coffee and I thought we'd have a look at this article from the Financial Review discussing, well, the cash flow issues of property investors, particularly those with rental homes. Now we know the magic trick to avoid tax in Australia that we were taught by a recent teacher who was complaining about potentially losing everything is to buy one investment property. Negative gear it, don't pay any capital off. That's for suckers. That's for suckers. What you do, and hashtag not financial advice, what you do apparently is you only pay the interest. That's the magic trick, the secret sauce. Then you do it again. So you get twice the power. Twice the power. Then you do it a third time. Then a fourth time. Then a fifth time. And finally a sixth time. Although I'm sure there are many others that are more than six. So you have this collection of investment properties. You become the slumlord. Slumlord of millions of dollars worth of property, where you don't actually have any capital in it other than equity that could evaporate. Because you've only been paying interest only. Then you go to the media and complain. Because they won't give you another interest-only loan. Or you're retired and have thousands of dollars of monthly repayments. So, that is why this is of a huge concern. A big portion of the wealth of our civilization has been funneled into property. Because, for these primary reasons, we're property obsessed. Australia is property obsessed. I think a lot of foreigners may not appreciate just how obsessed Australia is with property, with homes. Every show on the television is about it. Everyone's talking to real estate. Everyone wants to buy a home, rent it out. Rent money's dead money. We've all heard that. We're in other nations, other people, other commentators are saying, well, property's a loss. It's a home. You should live with it. You may have some attachment to it, but don't see it as an investment. It's got a yearly running cost. Sure, you get a little bit of capital gains, but not in Australia, because property never goes down, apparently. So if we start seeing, say, investors in these properties struggling to manage their repayments, even though our cash rate is at an insanely low level, 0.25%. Hey, it might go negative. But if they're struggling now, if arrears rates grow, as we can see here as examples, they're struggling to make these payments, and more properties are coming onto the market because demand from international students is disappearing, because international migration is disappearing, which was a large portion of Australia's population growth, then we may start seeing some forced sales. We may start seeing some impact on property prices, which have grown significantly. And then if those edge cases start to drop, and all of a sudden the equity these people have in their properties starts to affect them and they're not getting any rent, then you might get a panic. Do you think that'll happen, everyone? Do you think that's possible to happen here in Australia? Because I know they talk about in these articles, in the property articles, all the people who are paid ahead on their mortgage. And a lot of people are. A lot of Australians have been hitting it hard, paying it off. But the issue is, it's not those people you need to worry about. It's the edge cases. It's the people that are in too deep. And if they are forced to sell, that's going to affect all of us. And that's going to hit property everywhere. Because it's the last one in your street that's sold. It's the last one in your suburb that's sold. Am I the only one that looks at the bank valuation of your property? Your CommBank has this thing where you can see, their estimate of it. I'm looking at it going, that's complete not a garbage. But I don't mind. They can pretend to think that it's that value. It makes my LVR look fantastic. So let's have a look at this, everyone. So property investors already struggling with falling rents and rising vacancies face a further cash flow crunch as the number of empty rental homes languishing on the market starts to surge. And just think, because people are abandoning, they're moving back home. They're moving into share houses. They're cutting costs everywhere they can because people are worried. Understandably so. And this will manifest in September. We're seeing more and more calls to continue JobKeeper. To to continue the bonus for the job seeker. Which, frankly, considering how little a job seeker is, I don't really have that much of an issue with, to be honest. Particularly if you pay your whole life in tax, government forces you, steals from you your whole life. You know. Anyway, an analysis conducted by industry data provider suburbtrends.com.au for the Australian Financial Review showed more than half, 53.8% of all rental listings had been on the market at least 3 weeks. Most investors only factor in 2 weeks of vacancy when calculating their cash flow buffers, and a growing number of rentals still vacant after 3 weeks of advertising is creating a significant strain on many landlords, said suburbantrends.com.au director Kent Lardney. Property investors who are experiencing vacant properties are faced with serious cash flow pressures, especially those that rely on weekly rents to support mortgage repayments. More than 60,000 rental properties nationwide sit empty for more than 21 days, a 46.1% jump compared to a month ago. Over the year, the number has climbed 18.5%. So just think about that, everyone. Nearly a 50% jump in a month in the number of properties sitting for more than 21 days. What does that tell us? And even if the economy recovers, because people getting out of a property, if you have to, you'll do it quick. Boom, like that. A week, gone, out. And then if you've settled somewhere else, you're saving money. Do you think you're going to all of a sudden jump back into another property, or are you going to sit where you are for 6 months? Mr. Lardner said the virus and apartment oversupply had contributed to a significant increase in vacancies. I mean, if you want to look at apartment oversupply, just look at South Brisbane, West End, here in Brisbane. Crazy the number of apartments that have gone up there. We used to have our office there, and they were building an apartment right behind us. This is the first time we got an office. Build an apartment right behind us. You know, another one. It was a nightmare. Many tenants have moved out prior to the end of the lease due to financial issues, and some end-of-lease properties are facing a dramatic rise in competition against other apartments, he said. This is the thing, you're not special. You're not special in these, standard stock investor apartment. Oh, sure, you've got a nice pool. Oh, sure, you've got, this tiled gymnasium. Oh, sure, you've got this other wanky thing. But you're not special. You're competing with people in your own bloody development. And yet we were reading the other day about some genius that was using the home builder thing to buy, the home builder grant or whatever, to buy a $480,000 off-the-plan apartment. Off the plan, of all things, off the plan. Maybe he just hasn't been following all the news about all these building disasters where it's all off the plan. It'd be like... I mean, even these companies that buy these big mines, they will get the engineering company who designs and builds it to run it and then transfer it over to make sure everything's going so they get all the bugs out. No, you don't do that in housing. We just buy it before the drawings are even finished. I'm seeing many examples of tenants upgrading to larger or newer apartments for the same weekly rent as they have been previously paying. Despite lower interest rate on mortgages, many investors were not covering their costs because of falling rents and rising vacancies, said Digital Finance Analytics Director Martin North. I think many property investors are being caught by cash flow issues, Mr. North said. Normally around 2/3 of investors never make a positive return on their investments other than from tax breaks. So a lower rental income will make it even more difficult to hold onto an investment property. As such, 1 in 8 investors are now seriously considering selling up. And that's the issue. If they're flooding the market, if those edge cases start happening, and then people start seeing, oh, property's falling 5%, 10%, then you're going, oh, crap, get that on there, get it sold, one after the other. So, and I mean, in some ways, there could be an opportunity there. If you're cashed up and ready, that's the time to swoop in, buy some decent properties that over time, there'll be demand. There'll be population growth. We'll have to see. The inner city apartment market has seen the bulk of rentals failing to get tenants quickly, although some outer areas also notched up large increases on all the listings, Mr. Lardner said. West End, located just 2 kilometres from Brisbane CBD, racked up the largest increase in all the rental listings, with a 54% jump over the month, leaving 131 apartments vacant for at least 3 weeks. As I said, it's because there's so many of the bloody things. They've just built so many of them. It's crazy. Crazy every time I go down there. And it used to be kind of a trendy, hipster type of area. Not anymore. They've gentrified the hell out of it. Inner Sydney's Redfern recorded a 43% increase in rental listings, all of them 3 weeks, with 127 investment properties sitting empty. Correspondingly, the vacancy rate rose to 6.92%. All the rental listings in Melbourne's inner city, Carlton, rose by 23%, with 381 investment properties still untenanted after 21 days. And you've got to feel sorry for these people. That I bet you some of them were sold the dream, put all their life savings, everything into these properties. Going, yes, property's gold, get in, borrow. How many of them you think bought at the peak? In Southbank, all the rentals climbed by nearly a third to 29%, with 1,230 apartments failing to get rented within 3 weeks. The proportion of older rental listings in Docklands has jumped by more than a quarter, 26%, resulting in 421 empty apartments. Lidcombe, 18 kilometres west of the Sydney CBD, recorded a 43% jump in rental listings over 21 days, with a total of 115 investment properties sitting vacant. The vacancy rate is currently 10%, more than triple the level considered to be balanced market. There you go. In Stratfield, they've climbed 23%, and they're at 7.4% vacancy rate. And remember, guys, this is just the beginning of this recession. We'll have to keep an eye on it. We'll definitely have to keep an eye on it. What do you think, everyone? What do you think? There's some interesting statistics that the Financial Review brought to the table. And it is going to be those edge cases. It is going to be those people that are forced to sell. I mean, if we look at... Oh, I didn't want to bring that up. We look at a few stats. I mean, building approvals, they're concerned about new stock on the market. Sure, they kind of climbed up a little bit. But it depends on who you talk to. I was talking to an engineer. He does a lot of work in the private sector. A bit quieter. Multi-res, a bit quieter. Government work, sure, it's coming out. But will there be the same demand for schooling, for school extensions? Now that there's been a whole generation of people that have been exposed to homeschooling, there's a huge increase in demand for that. Yeah. Wage growth, completely non-existent. So here you got people who are investing in these properties, using it to mitigate their tax. Maybe their wage has started to stall. Maybe their hours have been cut. The 4-day-a-week everyone's talking about, which is just another way of saying underemployed. And then all of a sudden, they start getting issues with regards to cash flow. They get into arrears a bit longer. The cash rate's so low, it's all a joke, and they have to sell. Then one thing leads to another. Well, let me know your thoughts and opinions in the comments below. Are you expecting to get a bargain? Or are you worried what's going to happen? As always, please like, share, subscribe to the channel, and leave your comments. If you're a fan and want to support the content I create here, there are a few ways you can. You can join the channel on YouTube or Patreon. You can support us via our affiliate links at Amazon or eBay, or Independent Reserve and Kucoin. You can buy our merch from HeiseSays. We've got pocket squares, handmade by Rachel, you can see right behind me. You can also use Gold Pass from the Perth Mint, or you can support us via PayPal. Thanks, everyone. I'll see you in the next video.